You've reached the milestone. You followed the rules. You cut the expenses, you lived below your means, and you finally saw 5 figures in your bank account. $10,000. You feel like you built a foundation. You feel like the gurus, Nick and Bob, were right. But as the architect, I'm here to perform a cold-blooded audit on that $10,000. While you were celebrating, the 2026 economy was moving the goalposts. You think you have $10,000, but in terms of purchasing power, you are holding a melting ice cube. Nick tells you to put that $10,000 into an index fund and wait. He promises you a 7% average annual return. Bob tells you that if you just keep saving, the magic of compound interest will make you a millionaire in 30 years. In 1995, that was brilliant advice. In 2026, it is a mathematical suicide note. The world has changed. The inflation monster is no longer a 2% shadow. It is a 12% reality in the things that actually matter: housing, energy, and health. Today, we aren't just talking about investing. We are talking about wealth engineering. I am going to show you why buying and holding is the fastest way to stay middle class, and I will give you the architect's blueprint to outrun the monster. Let's look at Nick's favorite weapon, the S&P 500. For decades, it has been the gold standard, 7 to 10% returns. It sounds safe, it sounds logical, but Nick is using 20th century math for a 21st century crisis. In 2026, the Consumer Price Index is a lie. It measures TVs and clothes, but you don't build wealth with TVs. You build wealth with assets. Look at the price of land in 2026. Look at the cost of high-yield private debt. Look at the cost of energy-efficient infrastructure. These are rising at 12 to 15% per year. If your $10,000 is growing at 7%, but the world is getting 12% more expensive, you are losing 5% of your life every single year. Nick is teaching you to have more dollars, but less life. He is teaching you to be a rich slave to a devaluing currency. When Nick tells you to buy and hold, he is assuming the dollar will stay strong. The architect assumes the opposite. The architect doesn't hold. The architect engineers velocity. And then we have Bob. Bob is the king of frugality. He wants you to focus on the minus side of the equation. Don't buy the coffee. Don't go on the vacation. Save $500 a month. Bob's advice creates a scarcity mindset. It forces your brain to spend 10 hours a day thinking about how to save $50. As an architect, I know that your cognitive energy is your most valuable asset. If you spend your best years thinking about saving, you have zero energy left for scaling. Bob wants you to sacrifice your present for a maybe in 30 years. But look at the 2026 monster. Do you really think the world will look the same in 30 years? Do you think your $1 million in 2056 will buy what $1 million buys today? The saving trap is a cage. It keeps you small. It keeps you predictable. The elite 1% don't follow Bob's rules. They don't save for retirement. They engineer systems that produce cash flow now. While Nick and Bob have you running on a treadmill that is moving backward, I'm going to show you how to step off the machine. We are moving from defensive saving to offensive wealth engineering. In the next 2,000 words, we are going to dive into the alternative assets, the private debt, the hard asset arbitrage, and the hedged blueprint that allows your $10,000 to move at 15 to 20% velocity while the rest of the world is stuck at 7%.
Nick and Bob want you to own paper, stocks, bonds, mutual funds. These are promises made by corporations and governments. But in 2026, promises are cheap. When the inflation monster roars, paper burns. The architect doesn't own promises. The architect owns hard assets. If you have $10,000, Nick tells you to buy the S&P 500. But if the market drops 20% tomorrow, your 10K becomes 8K. You're at the mercy of the market mood. The architect uses hard asset arbitrage. We look for assets that have intrinsic utility. Micro commodities. 2026 is the year of the energy crunch. strategic land liens, small-scale investments in land that are inflation hedged. When you own a hard asset, you aren't waiting for a 7% dividend. You are owning the very things that cause inflation. When the price of energy goes up, the saver loses money. The architect who owns the asset makes money. We don't fear the monster. We own the monster's food. Bob tells you to keep your $10,000 in a high-yield savings account. He calls 4% great. But let's perform an engineering audit on that bank. The bank takes your $10K, gives you 4%, and then lends that same $10K to a high-growth business at 12% or 15%. The bank keeps the 8% spread for doing nothing but being the middleman. In 2026, we have private debt portals. Instead of giving your $10K to a bank, you lend it directly to asset-backed businesses. You aren't gambling on stock prices. You are collecting a contractual interest rate. While Nick's followers are praying for the S&P 500 to go green, the architect is collecting a guaranteed 12 to 14% return through private debt. This is income velocity. We have cut out the middleman, and we have doubled the 7% guru standard without the stock market volatility. Nick and Bob teach diversification. They tell you to buy 500 different companies. But in a crash, all 500 companies go down together. That isn't diversification. That is collective fragility. The architect builds a hedged portfolio. We split your $10,000 milestone into 3 distinct engine zones. The shield, 40%, hard assets. This protects you from the 2026 monster. If inflation goes to 15%, this side of your portfolio grows by 18%. The motor, 40%, private debt. This provides the cash flow. It pays your bills. It gives you the velocity that Nick's index funds cannot provide. The turbo, 20%, asymmetric risk. We look for black swan opportunities, investments where the downside is $1,000, but the upside is $10,000. By engineering your wealth this way, you aren't just saving. You are building a financial fortress. You have escaped the 7% trap. You have ignored the frugality cage. You are now moving at a speed that makes Nick and Bob look like they are standing still.
Knowledge without a blueprint is just noise. Nick and Bob gave you a waiting room. I am giving you a construction site. If you have $10,000, you don't dump it all into the market on day one. That is gambling. The architect deploys capital with precision. Month 1 through 3, the foundation phase. We move 40% of your capital, $4,000, into hard asset hedges. This is your shield. We aren't looking for 100x returns here. We're looking for stability. Gold, silver, or commodity-linked ETFs. While the dollar melts, your shield grows. You have now neutralized the 2026 monster's first attack. Month 4 to 8, the engine phase. We deploy the next 40%, $4,000, into private debt and cash flow systems. You are now the bank. You start collecting monthly interest payments. This isn't capital gains that you can't touch. This is real cash hitting your account every 30 days. This is your income velocity. Month 9 through 12, the turbo phase. The final 20%, $2,000, is your asymmetric fuel. We look for high-growth, high-risk opportunities that have been beaten down by the market. We aren't saving this, we are attacking with it. By the end of year 1, you don't just have $10,000, you have a self-sustaining financial ecosystem. While Nick's followers are checking the S&P 500 every morning with anxiety, you are watching your blueprint operate on autopilot. Why is this roadmap urgent? Because the 2026 monster is accelerating. Every day you stay in the saving trap, you are losing ground. Nick and Bob tell you that time is your friend. They are half right.
Time is only your friend if your velocity is higher than inflation. If you are moving at 7% and the monster is moving at 12%, time is your executioner. The buy and hold strategy was built for a world of stability. That world is dead. In the world of 2026, stability is a myth. The only safety is agility. The only security is systems. When the next market crash hits, and it will, Nick's followers will panic. They will see their 30-year plan evaporate in 30 days. But the architect is hedged. The architect owns the hard assets that everyone else will be desperate to buy. You don't just survive the crash, you profit from the chaos. You have seen the math. You have felt the reality of the 2026 monster. You can no longer pretend that slow wealth is a safe path. You have been unplugged from the guru illusion. You have two choices today. You can go back to the saving trap. You can keep cutting your coffee, ignoring the vacations, and hoping that 7% is enough to outrun 12%. Or you can become the designer of your economy. The $10,000 milestone is not the end of the journey. It is the beginning of the construction. If you are ready to stop playing defense and start engineering your wealth, you belong with us. This channel, The Blueprint Investor, is not for the average saver. It is for the elite 1% who refuse to accept mediocrity. Subscribe now. Turn on the notifications. In the description below, I have left the 12-month velocity audit. Download it. Use it. Audit your $10,000 before the monster eats it. The gurus gave you a dream. I am giving you the blueprint. I am the architect. The construction has begun. I will see you on the next floor.